Happy New Year, everybody. It's Anthony with Land Title. I came to bring you your Boulder County market update at the new year. So let's take a look at what happened last year and make some bold predictions here. The biggest thing I wanted to report is really just the fact that we had that huge drop in inventory. We usually don't see inventory drop this far off, but it looks like almost 40% of homes came off the market. So that being said, this is going to be an interesting spot going into the new year with a low inventory environment. And under contracts looked amazing last month. They're 37% above this time last year. So that's really going to help out going into the first quarter. Those lower interest rates are really helping buyer appetite at this point. So let's take a look at the inventory situation a little more in depth. This is inventory only. So if you look at it by submarket, it looks like really strong inventory came off the market in the Niwot, the Boulder area, maybe even into somewhere more like Louisville. But the vast majority of the county is a lot more like Denver Metro, and it only saw 32 to 35% drops in inventory, a little less of people just getting frustrated and waiting for another time, right? So that being said, use this information with your sellers because it could be a really favorable seller market here early on in the year. If you look at it by month supply of inventory, at 3.2 months of inventory, we saw a lot of concessions. We saw, a more buyer favored market than we've seen in a long time. And now at 1.9 months of inventory, this might be a really good time to start putting stuff on the market. Your sellers will have a really good chance of selling, and they might actually be able to capitalize on a little seller favorable market time period that we're going to have for a little while. Now, what does that mean as far as, well, as far as the time on market? So if you look here, this is days in MLS. 62 days in MLS has been the slowest month in a long time. So active to under contract time in 62 days, it's gotten a little bit slower, but this is actually more normalized than we've seen in a long time. This is what we saw, 5 years ago, pretty consistently this time of year. So as things come off the market, as we kind of go into January, you're going to see one more month of low or high days in MLS, but then we're going to be off to the races pretty quickly into February, March, April, because with all that inventory coming off, it's going to reset those timers if people bring it back to market, and it's going to really drastically lower the time in MLS. So it's going to be more competitive for your buyers out there. This one is our price range slide. So I like to talk a little bit about this when it comes to, just the segments and how they're acting real differently, right? Because over the course of the last year, that price of money has really become cost prohibitive to buying those trade up homes. So those $1 to $3 million homes in Boulder County slowed down in the neighborhoods of 20 to 30% over the course of the year. That's a tough market to be in, right? So that's been a struggle. Now you saw a lot of inventory start to pile up in those marketplaces. Anything under a million, everybody was kind of forced down to buy in that area. So still relatively competitive. Definitely some drops in total sales, but that is actually going to heat up much faster than everywhere else. But there's just not enough inventory there. When we look at it by total inventory in each one of these segments, look at the month supply of inventory under 2 million even, right? They're going to be competitive this year. There's not a lot out there. And as you kind of rise up above that, we took 7 months of inventory off the market in December. We went from 17 months to 10 months. So that's going to make a big difference too. If you've got luxury listings, you got higher end listings that need to come to market, early on in the year could be a really good time for that because just not as many of them out there. If you're working with buyers and you're in the lower price points, you really need to be aggressive. You need to get out there early, right? Because it's really going to make a big difference for them before it starts to get ultra competitive. As rates start to trickle down this year, as everybody's expecting, we start to see an increase in buyers out there in the marketplace. The month supply of inventory, or I'm sorry, the days on market for this segment tells you quite a bit as well, because you can see the higher price ranges, those over a million price ranges, they're starting to have higher days in MLS, 100 to 120, 90 at 3+ million. But if they are buttoned up listings, look what happened at 2 to 2.5 million last month. New listings came on the market. They were definitely really nice. People loved them. So they jumped in, they put them under contract quickly. It's not that people aren't shopping. It's just that there are less people shopping. So they're really picky if they are, right? If you look under a million, that kind of tells you this story, right? That's 60 days. That takes a couple of months to go under contract. And that was pretty normal because you were just kind of waiting for a buyer that matched your house. All right, so solds, this is the portion in this where we talk about how, maybe this is our low watermark year, right? 2023 is a lot like 2011, not a ton of sales. It was a tough year. We just saw a lot of divorces at land title and not a lot of like trade ups or, we had a kid and we need a new home or, a lot of movement from out of state, right? So with those kind of necessity transactions, this should really be our low water mark going forward. Now, that being said, the NBA the other day released they expect 14% more sales in the following year. So in 2024, we should see a big increase. The sales from 23 or from 22 to 23 dropped 12%. So that 14% bump should give us a better year than we saw in 22. Now, in 22, it was very front loaded. It was very heavy with those lower interest rates and things were still going a little wild, right? And then the last half of the year was crickets by Q4. This is going to be an opposite year going into 2024. You're going to see it kind of come off to a start, maybe not even quite at a gallop, but closer to where we are right now. And then we're supposed to have a really big tail in the fourth quarter where we have a lot of sales. So the opposite of what we experienced last Q4. That being said, this is very stereotypical of transitioning markets. So really buckle down, double down on your marketing, double down on your calls this year, and you should have a really good year, right? Because the longer this year goes, the better things are, and the things are going to improve as 2024 moves on. Now, this is average sold price. This is a tough one to have a conversation around because in November, we sold 13 homes at 3+ million. In December, we sold 1. So the average sales price swing is really big, right? And this chart doesn't make a ton of sense when you look at it that way. That's why I've included the trailing 12-month percentage change at the bottom. That tells you over the course of the last 12 months, what is that average versus the previous year's average? So what happened between 22 and 23? Well, in a place like Boulder, very consistent, very flat, right? We had no price change kind of as a whole, right? The hardest market hit was Lafayette. It actually had a drop by about 6.5% in the average sales price. The market that favored the best in this area was Longmont, and it's probably because of its affordability, increase of 3% in average sales price over the course of the last year. So some good information to pass along to those buyers and sellers, or people even, just interested in the market. Now, this one kind of gives you that same idea of what happened in 22 versus 23. I don't really need to tell you this, but you knew 22, the beginning of the year, was pretty insane, right? So when we had that slowdown in 23, not to be surprised, we're going to enter into January with much better numbers than we saw January, February last year. So I'm very optimistic about the market going forward, which is a good sign. You can see it in this slide. The last slide I want to talk to you about is the percentage sold price to list price. Sold price to list price hit 97%. It was one of the lower numbers we've seen in a while, which is to be expected this time of year, but also 97% can be deceiving because the 97% number does not include price drops or price concessions. And at Land Title, we've experienced 40 to 50% of our deals coming in have concessions tied to them in some way or another. So it's been a very challenging time period for our sellers out there, and the buyers are really getting a good deal. So this is going to go away at some point. So get those buyers active and out there soon. So before they have to really compete in that spring market, there's still a good window for them to capitalize on what may have been the best bargain in real estate over the last, let's call it, few years, right? So this was definitely the low water mark. If you have any other questions, you need any other data, I'm always here as a resource for you. I'm Anthony at Land Title. Don't forget to like and subscribe to the YouTube channel, and we'll catch you on the next video. Bye.